Welcome to the TMT Stock Market Strategy video for Tuesday, July 12th. We did get a continuation move from the non-farm payroll numbers that came out on Friday, so we did push a little higher. And we actually gapped high. That was the bigger part of the move, and then markets kind of grinded higher pretty much most of the day. Shorts covering. Not a good trading day for day traders. If you're trading the index, if you're looking for something other, then that may be possible. But yesterday, quiet. Tonight in the overnight, the markets popped up yet again to try to make new intraday highs. So if we close, we're going to be making more highs. Now, what do we talk about? We mentioned that that we could easily get to 2,200 before we move lower. Absolutely. I think does it go straight up there? We've had about 9 or 10 days. Probably, I would say, and if I looked at the charts yesterday, 250 S&P points. That's insane in 9 days, and most of them were gaps. So you got to use caution here, guys. Even if you think the market's going higher, would you really want to buy the market here? Now, if I hear a lot of pundits, oh, we're breaking out, then that's very well possible. That could be possible, but why would you want to buy when the market has really had 1 day of pullback of 10 days? That's just crazy. So take a step back. Digest the move. Let's see where we go from here. Maybe we get a little bit of a pullback, a 2 or 3 consolidation. I'd rather buy the market, whether it be a consolidation of 2 or 3 days at the upper end of the range, upon this new breakout, or a pullback. You got to use caution here. There's no two ways about it. There's a couple of big red flags, and that's the VIX, as you can see here in front. Also, I took care of looking, of the seasonality charts. And the VIX comes into a big buy, and it's very strong between now and October. So volatility is here, and the markets usually sell off between in July actually. The transports, the Russell, looking at the historical seasonality chart. So you got to be careful here. I think you short the market. I think you have to wait for a trigger to short. You don't short just because price is up here. So that's something that I would definitely insist on. But volatility is cheap. You can see insurance is cheap. Excuse me. You can see the VIX here basically at 13. Now going to open well below this historical $12 value here. Now, and remember, I like to see that break down and out of the Bollinger Band. Same thing for the downside. But you can see here this little spot that the Bollinger Bands actually are turning lower. So this, again, another move, 1 or 2 more days down. Today is Tuesday. Could we have a turnaround Tuesday? It's possible. It's very well possible. We can definitely have that. So I watch. Be careful with the VIX. We got extreme complacency again. The put call ratio is reading at 55, which is very, very, very bullish. Extremely bullish for that matter. Okay, so just use caution with that. Another little indicator, as you know, stocks above the 50-day moving average. We're back up to now these overbought levels, these extremes. We're at 76%. Now, obviously, we can go all the way up to 100, right? But these are the areas that I like to pay attention to once that indicator gets up there. Now, there's a little bit more room to run, so we're not quite overbought yet where we're at these levels of extreme. Okay, not yet. And here's the NIMO, which is the McClellan oscillator, right? Good gauge of overbought, oversold. And you can see here we're at 0 here. We're at 55. So the Bollinger Bands is right around 67. So there's plenty of room actually before we could even become overbought, extremely overbought. And remember, overbought or oversold, they're not buy or sell signals. Keep that in mind. The NAMO, which is a little bit more, this is the McClellan oscillator for the NASDAQ. It is a little bit more overbought. So the NASDAQ is a little bit more overbought than the S&P, okay, the ES, the spiders. And then I wanted to show you real quick, in our premium video, we put some real good targets out in gold. We're trading the gold in our premium video along with the indexes. And one guy had asked me, what do you think? And I just said, I would stay away from gold. If anything, look for a very big or deeper pullback. This is the bullish percent GDM, which is a point and figure chart. 100% of stocks is on buy signals. 100%. Can't go anymore. Since this indicator has been created, it's never been at 100. So what does that tell you? 100% in stochastics. MACD oversold. RSI at ridiculous levels. Would you buy gold here? Of course not. You don't want to buy gold. We put out a special edition video last week, so look at it. Take a look at it on YouTube. We put it out there for our subscribers, and I would look for a pullback in gold and look for some certain levels before you look to buy gold. All right, I do think gold enters the second stage of a bull market, and I do think that gold is, but not when you see you have the just this is GLD now. You have the 8 at 127, and this is trading at 130.52. And even the 20s at 125. Very extended, very stretched, and you still got a gap area here that needs to be filled at one point in time. And that's probably where it would. And you got a very large gap here, as you know. This was the jobs number, so got to be careful here, okay? In the GLD. All right, now let's take a look at spiders. Let's talk about the markets. What do you think? What do you think? Where do you think the markets are headed? Okay, I think the markets are entering a phase right now. We do have consolidation at the upper end of the range here. You can see heavy resistance, which we broke out. Really not much here. You had one day breakout. What's going to really be the test is if this breakout can consolidate, and I mean like this, somewhere around here like this, upper end of the range, consolidation, and then breakout. Then I think that you're going to have a full-fledged breakout, probably to 2300. But remember, the index has come into some seasonal weakness in the month of July. So we might get a pullback. And if we get a pullback and you think that the market wants to go higher to 2200, which, we're not that far off. We're trading at 2141 in the ES right now. It's another 50, 60 points and you're there. But look at this move, guys. This is what I'm saying. Just, use caution. Remember I mentioned that bull flag? I showed that to you a few days ago. I said, watch, we got a bull flag here. Well, that bull flag worked out nice. But look at the gaps. Every day there's a gap. So it's very difficult when you're day trading to look for entries when you really get no pullbacks anymore, because the algorithms just continue to just drive this market higher. So you could see here's that little candle where we are now, and you could see here we're getting stretched. But again, RSI is at 60. We still got at least another 20% before we become overbought. All right. So S&P looking for a little bit of a pullback, a pause today. I'm going to take this at a neutral stance, and if we can, if we can, I think that we can actually look to even buy the market today, as long as the markets can hold in and pull back a little bit. You don't want to buy the market up here. You see the gap here, another gap. So we had two. These are 60-minute charts. I want to show you that on the 60-minute now we're starting to roll over, showing us a little bit of negative divergence here. It still needs to play out a little bit more. Let me get that out of there. So you could see that here. So we're starting to roll, crossover MACD, RSI. So we're getting a little bit of divergence. MACD is starting to curl in real nice. So use caution here. I would not be buying the market up here at these ridiculous levels. I'd wait for a pullback. Or if you're trading intraday too as well. And let me just put this back again. As you can see, here's really the big area. This is the big support. If anything, this is the 210. ES coming to the 2100. We have large open interest at the 2100 area, okay? And that's going to be the market makers' best interest to bring down bring down price back to 2100, okay? That's where really the max pain is in the S&P for this week's options expiration. Transports, you can see here, lower lows, lower highs. This is definitely our leader and the weakest, all right, aside from the IWM. So this is not a good sign. All right, that we can't just get up here and we can't challenge. We can't even take out a pivotal swing high. Excuse me. So this is a concern of mine when stocks are moving up, and really we only have the S&P and the Dow made new highs. So it's something to really keep an eye on here. Again, when you're trading intraday, it's a little different, but you still want to know what your analysis is, what's going on with your technical view here. Diamonds, you can see here, really breaking out here, but again, needs a lot more work at the upper end of the range to really confirm a good breakout. And here's the Russell. You can see here heavy resistance, big band of resistance, and here's that area where it continues to fail. Okay, so this is a double top. Let's see if it breaks out of this double top, and then if not, I would look for at least a 50% retracement back down somewhere in here, and then see if this market can actually move higher, has any legs. All right, next is going to be, and last is going to be the Qs. Qs here challenging that swing high right up here in this area. And it looks pretty good. I mean, it really does. It looks constructive. Amazon has Prime Day today. And usually what happens when Amazon's Prime Day, usually rip them up to the upside and then they reverse after Prime Day. So, but Amazon's making all new time highs. I would not be looking to short that beast. That is a beast, no question about it. So here we go, guys. You see here, really no pullback. I think we had a 1 day pullback out of 9 days. So it would really kind of be silly to look to start adding positions for those of you who are longer term investors. Let the market digest the move. Let the market digest, see where we're going, and then pull back in here for some sort of a pullback before we start to move higher. All right, guys. Hope it helps. Have a great day, and we'll see you tomorrow. Take care.